Having a deep understanding of your competition is critical in business, especially in multifamily investing. The problem for investors, though, is that touring rent comparables can be nearly impossible unless you live in the market that you invest in. Today, we're going to discuss the importance of physically touring nearby comparable properties, the key things to look out for, and practical ways to overcome the distance challenge. John, great to be here with you.
Yeah, Mark, glad to be here as well. Just before we started recording, you and I were kind of having this conversation, and I kind of wanted to kind of put a bow on it. But, we were talking about the meeting rhythms and just, rhythms in business, rhythms in life. And, for us, I think our morning huddle is such a great example of that. We do it every morning religiously at 8:30 a.m. and everybody updates on what they did the day before, their top metric, and what the number one thing they have to get done today is. But it's funny, the first couple of months, it's a little awkward, it's a little
Yeah.
strange, and then you just get the reps in, right? And so it just made me think about my son who's 10 and, taking jazz drumming lessons and just watching him practice, and that concept of practice versus playing, right? And the more you practice, you get past those uncomfortable moments and you grow and improve. And so, we didn't really get a chance to talk about it, but of course, with your professional hockey background,
Yeah.
like I have to imagine you're well versed in the concept of practice and rhythm, right? When it comes to life. So tell us a little bit about it. I'd
Yeah.
love to hear some of the
No,
examples.
and 100%, I would contribute real estate success to just getting the reps in. And going back to hockey, any success I had, I wasn't always the most skilled guy, but I always just worked hard and became skilled through lots of practice. And I remember my dad, we grew up on a farm, and he flooded the one of the barns. He put up boards at one point because there was posts all around, and we ended up running into a post here and there. So we put the boards up to actually make it so there's no post right in the middle. Cause you hit a post, you generally go down a little harder than that, then you take a bigger brunt than the post, right? And so anyways, he put up boards, but I would go out there on a regular like nightly. I'd be going out and just taking hundreds of shots. 100, forehand, 100 backhand, 100 snapshot, 100 slap shot. And over time, I could just pick those corners. And John, it's a funny thing. The Hockey Hall of Fame actually had a competition, and the competition actually awarded the winner with it was the fastest shot accuracy, and they measured a bunch of things. And there was a $10,000 award there for a reward for the top score. And actually I won it that that year.
Yeah.
And so the second year they had it again, and then I won it again. And so they stopped doing the gift, the $10,000. I think they cut it to 5,000 the next year. But going back to your point, is getting those reps in is is how mastery happens. And the interesting thing I found, John, is that the more I did, the more enjoyable it was to do because I just got better. Like when mastery happens, your enjoyment of it actually increases. I'm not sure. I know you're big in music as well. Like, have you found that, and even in business?
Oh, 100%. I mean, in both really. And I think about my, running Mark Spain real estate, or even when I was still selling, the reps of a listing appointment. And so what we would kind of talk to our agents about, or internally when I was selling myself, was like we had this beautiful marketing presentation and there was a flow and a rhythm to that in and of itself. And so that mastery around just that presentation, right? And then what happens is when you're in the moment, you're not having to think about, well, what am I going to say? What am I going to say next? It just becomes easy, right? And then you're removing variables from the situation. So you can say at the end, if you didn't win the business, well, I know it wasn't the presentation because I know I've got
Mm,
that locked down, right?
yeah.
And so there's just so many reasons for it. But yeah, with music, it's that idea, just you got to put the practice in because in guitar they talk about it like fretboard fluency, where you just know where your fingers need to go without thinking, and you can
Mm,
only get there if you just study the scales. But guess what, just doing a scale over and over again isn't a whole lot of fun, but it helps you get to that mastery. And then once you get to that mastery, you're no longer thinking, you're in the moment. And so I think about sales in that same way, where if you remove those variables and my follow-up is going to be impeccable because I'm going to follow a framework, my listing presentation is going to be impeccable because I'm following a framework, now I can better identify what I missed if I didn't win the business, or if I won the business, what should I be doing more of, right? And so that ability to be in the moment, I think, is really what we're talking about, where I'm not thinking about the steps, I'm thinking about, a couple steps ahead, in the moment,
mm.
right? So that's how I like to think about practice. But, in business, right? I mean, every time you have a conversation with somebody, I know for me, I get into you just lock into certain phrases, certain approaches, certain questions that lead to those positive outcomes. And so that's what mastery, to your point, and practice really is all about, because it leads to mastery. So yeah, I found it a critical component in my success. Why overthink things? Do the thing that works and keep doing that thing until evidence shows otherwise, right?
So that conversation actually dovetails really nice in what we're going to talk about today, John. And that is touring comparable property. So when we identify a property, we want to make sure to go walk the comparables and walk the subject property and actually do a comparison. And so through the years, we've walked through thousands and thousands of properties comparing. And so you start to identify and you get fine-tuned skill sets, and you have an eye, just like when I walk into a property now, into a home, I'm going and visiting a friend's house, and I'm kind of looking at all the, there, okay, there's little maintenance there just in the back of my mind. Of my mind, no, I'm not judging or anything, it's just
Yeah.
my eye goes there automatically. And so that's where, out of all the properties that we've gone through the years, and same with their team, with their massive experience there as well, when we're walking comparable properties, that's what we're going to be diving in today. And actually, now when I walk through properties, I get joy from that, just because like we're looking for something. And so when you start to find trends, or you start to see, we'll say, a story that's going in a direction based on looking at the comparables in the competition property, that property either gets a lot better, or it starts to not become as good as what you thought, and then that allows you to take the next step. And so doing the reps is what makes that, we'll just say, mastery. And then the benefits of that, John, is that our investors get the benefits of us getting that right. And so we're going to be talking a little bit more about that today.
Yeah, I think for me, this also brings up sort of this other thought framework that I utilize a lot. Reality that we get to do something versus we have to do something. And candidly, I think some operators view the rent comps as like a hassle because it takes time. When we travel to a market and we have our eye on a particular asset, we sometimes have to carve out 2 additional days just to kind of hit those rent comps and do it in a thoughtful, methodical way. And so instead of saying, "Oh, I have to do this," it's like I get to do it. We get to go see all these comparables and we get to learn what they're doing that we like or don't like. And we can then adjust our business plan, which we'll dive into more. And so it's actually something I take a lot of pleasure in, because it's just the knowledge we gain from that, whether it's for this specific deal or for some deal 5 years in the future. We're like, man, I really liked how that. Remember that one we toured in Tampa 4 years
Yeah.
ago and had that really cool amenities center? Like maybe we should do something like that. And a recent example, Mark, actually, is we're looking at a deal in the northern Atlanta suburbs as we speak. And, we were looking at some of the comps, and one of them I almost didn't tour because it was a brand new Class A. It was right within walking distance to like a downtown historic suburban area with restaurants and bars. And ours doesn't really have that. And so I'm like, is it a good comparable? But I still drove it. I'm so glad I did, because man, their pool was amazing. And we're looking at ours going, ours is just okay, but we can make
Yeah.
ours amazing like this. So we're actually going to just basically, in a sense, steal the page from their playbook and like give it to our designer and say, we like this look and feel, help us execute on that in a cost efficient way. Right. And so that's a great example of the value of touring these rent comps. But the number one thing is we've got to make sure we're comparing apples to apples at the
Yeah.
end of the day. And there's some no dust stuff. Like obviously, if you're looking at a 2000 build, you don't really want to compare it with a 1960s level asset. But at the same time, tenants, residents might be doing that. So we just still need to kind of have an eye on them, but just make sure we get into the psychology of the resident and say, okay, going back to that
Mhm.
example, somebody who wants to live walking distance to, bars and restaurants is probably at a different stage of their life than somebody who's really thinking about their kids, right? So it's probably more younger professionals or maybe retirees or empty nesters that would be attracted to that building, where the building we're thinking of acquiring is more families and, dual income married couples, right? Probably in their 30s and 40s. And so, it's important to know what the competition looks like and then put it under the lens of,
Mm.
okay, let's get in the psychology of this actual resident here and what would they
Mhm.
like. So that apples to apples comparison is really important. But I also suggest to anybody thinking of investing, widen the net just a little bit and look at the competition above and below, because that's also going to tell a story in and
Mm.
of itself.
For sure. Yeah, well said, John. And one of the things that we also look at as well when we're doing the comparison, so apples to apples, is if we'll say a resident, future resident, we're just putting ourselves in their shoes. They move to the area, they have employment at one of the major hubs, and they have, we'll just call it $1,700 to spend on rent. It's like, what can they get for their dollar and how far will they drive? Will they drive, 10 minutes? Will they drive, 30 minutes? They're probably not going to be wanting to drive more than 30 minutes, right? They probably want to be a lot closer than that. So it's like we go there and actually play that out. Okay, I have $1,700 to spend. That's my budget, up to 2,000 if it's really nice. And then, we actually go shop with that in mind. It's like, okay, what does $2,000 get me here? What does it get me there? And so that's where if it's like $2,500 or 3,000, if it's like an A class newly built, it's got everything really nice. Well, that's probably not going to be our competition. It's still, like John said, it's still good to have an understanding of what's the divide there, what's the gap, and how much more they're going to spend. So it's still good to know. But if they have $1,700, what where what does that monthly dollar buy in regards to rent, and in regards to, we'll just say, amenities, in regards to how nice the units are? Is that a one or two bedroom, right? And so that is something that we filter through when we're selecting the comparables to walk through when we go and visit these properties.
Yeah. And one of the data points we look at is what percentage of people are traveling what distance to get to their jobs. So census data tracks that. We could pull that through various data sources. And so, for example, if we see 65% of the residents in that area are traveling less than 30 minutes, that's like great, right? So that means we need to stay in a tight geography. But there are some pockets, not really the pockets we target because we like the more affordable Southeastern markets, but where the employment hubs are just so expensive that you see the majority of people are traveling, 30 to 60 minutes. And so that, could change your investment thesis just a little bit. But it's something we look at because at the end of the day, this is all about the local nuance and understanding that you've said it before on previous podcasts, but real estate is hyper local. And looking on a computer screen only tells you so much. I mean, gosh, even before we decide whether the deal's going to work for us, we pull up satellite maps and we can get into Google Drive and, Street View, I should say, and just kind of get a sense. But it doesn't replace standing in front of the asset. And there's one that comes to
Mm.
mind that we looked at in a pocket of Atlanta that, when you looked at the rent comps, you're like, man, there's all this rent upside here. And, there was still a case to be made for that. But when we drove the deal and we drove the
Yeah.
comparables, we realized ours was kind of on a crappy road with a lot of pawn
Yeah.
shops and like liquor stores. And, you can start to see why,
Yeah.
I'll just leave it at that. And so you're like, okay, maybe we thought we could get a $200 lift, but it's probably really realistically a $100 lift. And so we adjusted our underwriting. The deal still penciled, but we had to consider that, pulling into a beautiful Class A building with an entrance and a gate versus, off of a two-lane busy road with pawn shops. It's just a different feel. And so I think that's really important as you go through this. It's not always about just the building itself. There's another one we toured recently where I know that road so well. It's one of the busiest state roads in the state of Georgia. And turning left out of this complex would be impossible for like 8 hours of the day. And so that's actually a plus for ours because we don't have that challenge at the asset we're reviewing. So these things all have to get calculated into the math, so to speak, of like, okay, now that we're doing this as a comparable, we're going to adjust down because of that inconvenience factor. Just pulling out of the community is going to be challenging a large part of the day. And, over here, we don't have that. So that's an adjustment up on our asset, but maybe we find ourselves in the other situation and we go, gosh, this one's actually kind of got a more convenient location. So that means we got to adjust
Yeah.
over here. So that hyper local component is a big factor here. It's just some of it's feel, and emotion. What is the resident going to feel emotionally when they pull into this building? Or once again, if they see that there's going to be a challenge in terms of navigating around the
Yeah.
area.
Yeah.
So those things are super critical.
For sure. And just circling back on the data. So I know you had mentioned there, like, drive times as an example. So we spend tens of thousands of dollars to get the best data to be able to make the best decisions. Like, we're dealing with tens of millions of dollars. You have to have all the best information at your fingertips before you actually go out and tour these assets. And so CoStar is such a great example. That platform, CoStar, it's one of them in regards to what we spend on a yearly basis to make sure that our investors get a competitive advantage, that we do have the up-to-date data to be able to make the best and wisest decisions, making
Yeah.
wise choices. That's one of our core values, right? So, I thought I'd just share that, John,
Yeah.
before we keep diving in regards to the what we're actually observing when we actually do these walkthroughs.
Yeah, and it goes down to like the demographics of the area, the average and median age of the area. And so when we're doing these tours, we're mindful of not only the unit quality, the location quality, et cetera, but we're also looking at the amenities, obviously the interiors, like getting in once again into the psychology of that resident. And so we then match that with the demographics. So if we see, for example, that all of the competing properties for, maybe they have tech packages installed, and then we've already reviewed the demographics, but we go back and remind ourselves, and we're like, well, gosh, this is like, 25 to 35 pocket here in terms of age. I see why they're adding that amenity in, because it's a younger demographic that would maybe respond positively to that amenity. But what we do is we take it a step further and we just ask the on-site agents. Typically when we do these tours, we kind of present ourselves more as, hey, we're just, in the area doing some market research. And, everybody generally accepts that. Now, if we said, hey, we're thinking of buying an apartment down the road, nobody would complain. But when we say market research, it just sort of opens up a little bit, where I find that they're more just willing to share. And so we sometimes ask them, hey, do residents really respond to this co-working space that you've built? And they're like, well, it's pretty empty most of the time. So we clock that and we say, well, that's maybe not something we need to consider, because they spent all this money building this beautiful amenity that nobody seems to care about. So that's another factor here. So it's not only looking at the amenities that these on-sites offer to inform what we need to be thinking about, but we're also asking the questions, because operators sometimes spend needlessly on things that don't really move the dial, so to speak.
Well, and John, that actually sits well, because for me, putting my head on my pillow at the end of the night is really important, right? And so we've been told, like in the industry, it's like, oh, just tell them, just tell them you're looking for a rental and see what they say. The reality is to me that doesn't sit well in my conscience. Like, I want to be able to tell them straight, exact, and so telling them market research is something that is still straight, it's accurate, but ultimately you don't need to get into, the deep details of you're looking to buy. I mean, to me, that's still being straight with them.
Yeah. I've had
And
people ask and I answer truthfully,
yeah,
but if I just say market research, they normally just
yeah,
accept that. Yeah, and
no, for
I
for
think it's
sure.
that once again, it's just the psychology. We're telling the truth, but we're also not, making them put their back up and go, "Oh gosh, am I going to have
Yeah,
new competition
exactly.
in the area?"
Yeah, no,
You
exactly.
know, and there's these other factors, right? Because I keep saying it, but it's about the mind of the resident. And so, if you walk in and you see there's no marketing materials, or the office is a
Yeah,
mess, or there was a couple examples, Mark, I remember vividly, where we had to like wander around looking for the property manager, because, there was no mechanism to let them know we walked in, whether that's a bell or a ding, or that, just visibility. And we like, finally stick our head in an office and there they are. Right. And, if you're a resident and I just wandered in, like I'm immediately not feeling great about that experience. So that's an adjustment for us. Similarly, like we've mentioned in the past, we kind of like to see bad reviews on a deal
oh,
that
we
we're
love
thinking
it.
of buying.
We
It's
love it.
like, I wanna see that same thing over on the competitor side too, because we know
Yeah,
that we're gonna not only beat them on ours,
yeah,
and prove that, but we'll also beat
yeah.
them on in terms of the competition. So, just the overall feel of the process and what it looks like when you walk through that front door, the condition of the leasing center, but also just how you're greeted and how professionally are they dressed, et cetera. Those things are all something we're thinking about and logging in our notes, so that we can be, in terms of our adjustments, like on top of it.
Yeah, I would say, and when I say it, we love it, that we love seeing competitor uh, assets not managed properly, but we love the subject property to not be managed properly. So if they have low reviews and bad reviews, like that to us is like low hanging fruit. And then when we actually go and tour the asset and we meet the property manager and it verifies that they are just not living up to anywhere close to where our standards are, that to me is like the best low hanging fruit that we know will instantly turn that property around, will instantly be able to get higher amount of renewals, and will instantly be able to close more people walking through that asset. So the property management side is actually one of like, to me, one of the most important items, because it's such low hanging fruit. Once you change that, it changes the culture. And we all hear this in companies like, oh, I stay for the culture. I stay for the culture. When you are living at an asset, the culture is that's like one of the most important things, right? And the number one thing is the property manager. And do they treat them like a human being? Do they treat them extremely well or not? And when they treat them like a number, and John, like we see this, like this is the standard out there. They're just not treating them well. Like that for us is like big opportunity.
Yeah, yeah. In fact, I keep mentioning, but there's a deal we're looking at now, and it has an average 3-star rating out of 5 on Google. And what was fascinating is we don't just look at the headline number; we go and read the reviews. And so there was literally a moment in time where you could identify they hired the new property manager, because all of a sudden it went from good reviews to bad reviews. And I was laughing with Georgia a little bit. I said, if I had seen 2 of these reviews, because Mark and myself and our asset manager at Faris Capital Partners receive every review that comes in on our property, every survey, it comes straight to us. We don't look at it once a month. It's like in the moment. So we see it the second anybody else in the company or the property manager sees it. And it's like 2 of those reviews, I would have fired that property manager, because it specifically referenced her name and the bad service she provided in such a way that there's no confusion around this. Now, I say that we would have had a conversation after the first one, sussed it out a little bit, figured out, is this a, sometimes you just can't make everybody happy. It's just life, right? And people have expectations misaligned with maybe reality, and that does happen. So everybody gets bad reviews from time to time, no matter how. Apple gets bad reviews, USAA, some of the toply rated customer service companies get bad reviews. So it happens. But the way these were written, it was clear it was a personnel issue. And
Mm,
so I look at that and go, man, if we just get a better property manager in there, we're in the money, and then we
yeah.
do everything else, right? And so it is such a critical factor. And while you're driving around, it's also like what's happening in the neighborhood, right? So we're looking at, what amenities are nearby. And when I say amenities, is the grocery store a block away, or is it like a 10-minute drive away? Is there proximity to other things like Target or Walmart, or, amenities that our demographic would be responding to? So great example, this deal we're looking at, in less than a mile, you can be at a huge entertainment district with, live, work, play. There's a Trader Joe's, beautiful restaurants, and somebody could walk there, right, from the building. And so that's like a huge check. Some of the other rent comps we toured, the way they were just, located, it just wouldn't have that convenience as easily, right? So that's a plus in that market. So it also goes back to things like coffee shops, grocery stores, restaurants, right? But also you want to see the red flags, which I will say are things like pawn shops, rundown, uncared for buildings. I think about Rudy Giuliani's broken windows theory in New York City. I'm not sure if you're fully familiar with that, Mark, but when he sort of started looking at New York, when he took over as mayor, the city was in bad shape. I mean, crime was spiking. It just was unsafe. And what they realized, I don't think it was his theory, but he latched onto the theory. But he's like, if you walk into a neighborhood and see graffiti everywhere and broken windows, then people act accordingly. They go, well, this is a
Right.
crappy area of town, and so they're more likely to just throw trash on the ground and just skip over turnstiles at the subway. And so they started going, all right, we're going to stop people from jumping over the turnstiles and subways. We're going to stop graffiti. We're going to spend money to improve these buildings. We're going to put pressure on the owners to fix them. And largely that contributed to New York now being one of the largest, safest cities in the world, right? Just by fixing up the area and making it not look bad, right? And so your complex is no different. If somebody comes in and there's a gutter that's half fallen off the building, or when we took over our Largo deal, Mark, you might remember, it looked like there were literally like trees growing out of the gutters. They just hadn't
Yeah.
been cleaned in so long. You could see literally like growth coming out of them. Those things add up. And if you look, when we took over that deal, their occupancy was 88%, 89%, and we're at 96.5%, within less than a year.
With the wait
Uh,
list, right?
with a wait
On the
list.
dues,
That's
yeah,
right.
yeah.
And so when I say 96.5, it's because 2 of the units are under renovation right now, right? We would be at 100% had we not decided to renovate those units. So it just speaks to that impression of the community and of your building are just so critical. But once again, as they're driving down the road, they're seeing all those things too. And so if you said to yourself, this is not an area I'd want to live in, they're probably thinking the same thing. And so you need to understand that that's going to impact your investment in your deal.
For sure. And so the next thing is just multiple visits. So actually going during the day is one thing, and that you should definitely see, in the light, you want to make sure. But one of the things that a lot of operators may not do is actually go in the evening at night,
Mhm.
right?
Yeah.
And so, what does that property actually look like at night? Like, is there loud music happening? Like, is there, we'll just say, do you feel safe at
Mhm.
night? And so that is something that it'll tell you perhaps it'll tell you a different story. And so that's where for us, we just doesn't mean we're not going to buy the asset if we see a little bit of a variance there, but we want to know that prior to actually saying, yeah, we want that property.
Yeah.
And so, even consider going, uh, on the weekend
Yeah.
versus during the week as well, right? And so if you can stack your tour, during the week and then on the weekend as well, that just gives you a different perspective there, which gives you more information to make a wise decision.
Yeah, you can see a great looking deal in the day, and then at night there's 17 guys smoking cigarettes, blasting music in the parking lot, and hooting and hollering at every
Smoking
woman that walks
marijuana,
by.
right? Like,
Yeah,
one
we've
property
seen that
walked by.
before.
We're walking by and these guys are
Yeah,
smoking a joint there right outside, and it's
yeah,
like, "Oh,
yeah.
hey."
Yeah, yeah,
Yeah.
yeah, exactly. So you
Uh,
see it all, right? So
yeah.
that's just a little extra that can make the big difference at the end of the day, and all the way down to just like garbage day, right? Like, what does that look like, and how does that feel? And so, a good example for us that we look for on a deal we're going to acquire is, how is the valet trash handled if it's in place, and are they managing that correctly? Because all those things add up to that experience that we're looking for. This is another interesting thing, Mark, but when we're touring, we're looking at like the types of cars,
Yeah.
just, a great example. I go back to this deal we're looking at again. There were just nice, well maintained new cars, and you're like, okay, so this is a wealthier or sort of a more stable economic demographic here. So this is a deal that will be more of a middle class versus working class deal for us, right? So like that's something we need to clock a little bit. And it's birds of a feather flock together. So if I'm, somebody who for whatever reason is in that, apartment stage of my life, but I'm growing in my career, I want to be around other people that are similarly, ambitious in growing their careers, right? And so that's part of the psychology here. And it just also goes back to when we're touring these rent comps, it tells a story, the types of cars, the way the buildings are maintained, or is there trash everywhere on the ground, et cetera. So all these things are things you should be looking for. So,
Mhm.
I think for us, it's this idea of making sure, if you're a multifamily investor or operator, have a checklist for this process. So it's a
Yeah.
consistent process and you're looking through these things in the same lens each way, and noting those things. So just a little tech tip that I use, and a lot of us here at Faris Capital use, is we use Google Drive for our document storage. So what I actually do is on the property, I have those checklists in the folder already for the asset, that we're investigating. And so I can just go in there and log those notes. And so everybody on the team has access to them in that moment. So if somebody wasn't able to make the trip, they can review that. And you can take
Mhm.
photos right from within the app, videos right from within the app. So everything's just filed away and organized. So little tech tip, but it works well for me. So I don't have to get home and organize my notes and upload a bunch of stuff later. It's just already ready to go that everybody has access to. So making sure you have that strategy built in, that you're just not going and wandering around and go, yeah, this looks great, or this doesn't look so great. Like have a process where you're
Mhm.
analyzing each of these things and making those adjustments depending on what you
Yeah.
find. So it's a little more scientific, right?
Yeah. No, well said. And we have, John, we have a lot of really successful business owners that listen in on our podcast here, and they would say the same thing, when with their business is like checklists, systems, processes, and have a standardized approach. And so when we're going and buy these properties, it's no different. It's like we're buying a business. That's how the way that we look at this when we're going in. We have a standardized approach to ensure that we don't miss anything. And so the beauty of that is like when we're going in and once we make that selection, we if we miss something, we only miss it once. And the problem is in this class is that if you miss something, it can be millions and millions of dollars. Right? And we're not dealing with like the smaller single family properties. And that's where, John, I think our experience and the team members that we have with, Georgia and Joe that's gone full cycle on, more than 20 of these deals and have, exceptionally well. We've learned the things not to miss out on. And so it's on our checklist, right? And so if we miss something, it would be something just so minor that would not have any sort of we'll just say impact on the underwriting and the returns just because it would be on our checklist and we don't miss checking something off.
That's right. Absolutely. It's so critical. And I think it's one of those things that, we've been around enough business people. The great do that. The okay to good don't. And so when I'm talking to other business leaders or other friends of mine who are entrepreneurs, I am actually often surprised at how many people will try to explain away why they don't need that. Well, I'm a little more, in the moment. I like to improvise on my sales calls. And it
Yeah.
was interesting. I was actually recently talking to a guy, it's a startup, and he's their top salesperson, right? Because he's the entrepreneur, he's the founder. And he's hiring these account executives and they're just not performing. And I started asking him about, well, have you scripted? No. Well, you just, are
Yeah.
they winging it or what are they doing? Right. Nobody's going to care as much as you do. And like, you'll always be able to be the best converter at Mark, or at, Faris Capital Partners or at Faris team,
Yeah.
right? But how do you train these others? It's through systems and process. So
Yeah.
such a critical component. So I think at the end of this process, it's really about a couple of things. The main thing being we need to validate our rent assumptions, right? So
Yeah.
that's the main thing. We're walking through these and we're saying, okay, we thought we could get 1850 for a 2-2, but now that we've toured these comps, it might actually be 1800. And that could be the difference between a go and a no-go deal.
Mm.
Or we might find, gee, like we actually could probably crank this up to $1,900
Yeah.
based on what we found. So, it cuts both ways, but you have to be willing. And this is sometimes the hardest part, right? When you've invested time and money and travel to
Right.
validate a deal, it's the sunk cost fallacy, right? I don't know if you're familiar with that term, Mark, but sometimes as humans, when you spend a lot of time and effort on something, your psychology says to keep on going, even when all the evidence points to it's time to eject.
Yeah.
And so, I just try to remind myself of that often, right? I think back to when I was selling real estate, that buyer, I'm on the 75th home that I'm showing them and going, but maybe it's the next one they're going to
Yeah.
buy. When in reality, I should have walked the deal 25 and said, all right, enough's enough, guys. You're just not going to buy, you know? So, those are the important things. And then the other factor, I kind of already mentioned this, but borrowing ideas, right? Because you're going to see some unique stuff that maybe you just haven't thought of, or an approach that an operator's doing that you really like. And you can then apply that to your business plan, or even go back and revisit other deals that are in process and say, gosh, what if we did this? Sometimes it's as simple as, we're touring a rent comp and they just have a great feature sheet and we like the way the information was presented and it was clean and easy. And then we go look at ours and go, there's an opportunity to update this. So no insight is too big or too small for you to consider pulling over to your side. So not only are you validating your rents, but you're also like doing market research and getting ideas and talking to the on-sites about what the residents that walk through their door are saying and what they're looking for and what they like. So it's beyond just the comps. It's also the ideas that you can gain from it.
Yeah, for sure. And the other thing that gives me peace of mind as well is it's just not our team. We
Yeah.
actually stack, we bring our general contractor with us as well because, he just sees things a little bit different being in the business of renovating assets at a different level altogether. And so he might catch something that we may not see off the cuff. And then we also bring our head of property management as well to come and verify the rents and just get their perspective because they're going to be the one that's actually selling it, right? So they need to believe in the asset that and the rent amounts that we actually have projected. And for us, when we go in and we have projected rents, the goal for us is to exceed it, right? So if we're trying to grasp when we come short, we're going to need to report to our investors that we're actually coming short of our rent projections, right? And it's not something we would want to make a habit, right?
Yeah.
You get maybe 1 month that's a little bit lower, and there's one maybe unit, but when you have consistency with that, if you keep coming short on your rent projections, that's telling the investors that the returns that you had projected are not going to be hit,
Yeah.
right? And so for us, doing this work up front saves us the anguish of having to report down the road, sorry, we're just not hitting the rent projections. I'll tell you this, being able to say that we're overshooting it and we're overshooting it by $50, $100. I'll just say, John, at the end of the day, I feel a whole lot better about myself as an operator to be able to ensure that we're hitting our projected numbers and helping our investors get further ahead when
Yeah.
it comes to their investment returns.
And I'm so glad you mentioned the property manager, because if you're leveraging and working with a third party property manager, what we like to do is we don't send them our information first. We challenge them to go pull rent comps and to pull a rent analysis. So we can, number one, compare, is our thinking aligned? And it may even give you some pause. Maybe they come back with something that's kind of weak in terms of an analysis, and you go, maybe we should look for another partner. I mean, that hasn't happened to us yet because we vet them heavily on the front end, but you might be surprised with what they come up with. But you said it, they're the ones that are actually going to be the ones in a sense selling the deal, sitting in the leasing center every day with their team and their staff. That of course we are a part of that hiring process, but at the end of the day, they're the execution component. So making sure that their thoughts align with ours and that they believe in the asset, so it helps us make better decisions. And look, not every operator has a team of people. Not everybody, so some of you listening may be looking at a 4 or an 8 unit building, and maybe you're in the Ontario market and it's challenging there, so you start thinking about other areas. So we say that at the end of the day, nothing is going to replace in-person tours. But if you find yourself in a situation you can't do it, you better make sure you have really strong on-the-ground talent, whether that's a trusted broker or a trusted property manager who can take the same approach we just outlined and do it on your behalf with photos, videos, and detailed notes. Virtual tours can do a good job, but it gets back into that feel, right? And actually stepping foot in. So I would say for us, we would never buy an asset that we haven't personally toured multiple times and that we haven't personally toured every rent comp. That is a no-go for us. We just wouldn't do it. But if you're in that situation, there thankfully with technology are some strategies you can utilize, but nothing is going to replace that in-person approach. So for us, we talked about this earlier. We like the drop-in approach versus the pre-scheduled approach. These leasing centers are open generally on predictable hours, and you can see that in Google on their business page. So we just like to pop in because part of it is just seeing what would the resident experience if they did this. But if you're traveling and it's a smaller deal, probably planning ahead a little bit and booking in those tours would make sense. But that's just our approach. We like that drop-in approach. So anyway, just some of the things we're thinking about.
For sure. And obviously, when we're going through, we're taking notes, right? So we're not, it seems like a very basic thing, but we're taking notes on that so that later we can, when we meet as a team, we can actually go back and reference that. And we have our checklist there as well. And yeah, for us, we're walking, the streets, and we can actually take some, we'll say, some photos to be able to reference back. And that's of course something that we want to get permission on. So we're not taking photos of the units, of course, but generally, where people are living in their stuff, that's not what I'm talking about at this point. For us, the walkthrough is fine, and generally they'll have a model unit that's ready to go where there's nobody actually living. Sometimes at the units that they're showing us, it's actually leased by somebody. So we're actually going in, it's not properly staged, but it just gives us an understanding of the type of finish that some of their premium units have done. And then other times they actually have, standardized, we'll call it model suites there as well. So once we go and do that, then at that point, we're going to go back and we're going to be adjusting our underwriting. And so this is something that in general will actually come back and we'll just say that from what we see from our initial underwriting, we actually get um, the deal gets better after we do it because we're very conservative up front. And so after the walkthrough, a lot of times we'll actually, the deal will actually get better than what we thought after, seeing what is actually out there and then what our standard coming to the table, what we know we can actually get. And so a lot of times the deal will actually get better after we do one of these walkthroughs.
Yeah. And then finally, we're not only looking at the rents, but we're looking at the renovation scope. Maybe we overestimated what we would need to do to compete
Yeah.
effectively in the market, or maybe we underestimated it. So we make adjustments there. Or, it goes back to an idea. Maybe we saw that a lot of them had a really, great approach to, say, tile backsplash. And we're like, oh, that's interesting. Maybe we need to consider that. So, it's just about the level of finishes and then also the prioritization around which amenities we either add or, expand within the community. So that's all part of this process as well.
Yeah, for sure. And so, yeah, we're looking at like level of finishes. We're looking at overall amenities, as you said. We're looking at, what's included in the rents, right? Is parking, is what kind of extras do they have? John, what would be some extras that we would be, because we need to compare apples to apples. So if somebody is saying that, the competitor is saying, okay, this is 1800 and it's all in versus another competitor saying it's, 1600 plus, 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 plus. That's where the conversation with the property manager is important. But what would be some extras that some competitors would actually charge for when it comes to, their monthly rental premiums and extras.
Well, some of the things you typically see could be what I mentioned before, the tech package add-on where you've got, Ring cameras and smart thermostats, things like valet trash where somebody comes and collects your trash twice a week so you don't have to haul it to the dumpster, washer and dryer rentals. Those are things we like and we implement in our buildings now. Our approach is typically to do an all-in pricing, so the lease is the lease, but we factor it in. And by that, what we've learned talking to property managers is often people, it's kind of that whole like 9.99 cable or whatever, but then you get your bill and it's somehow $300. And you're like, wait a minute, I thought, what happened? Right? Well, there's this fee and there's this fee and there's this fee. So it depends on the circumstances. There are times where we do charge separately for, say, the washer and dryer. That's a really good example where we actually do that separately because not every resident needs that. So that's an example. But candidly, we sometimes see operators that charge a $5 amenity fee or a $10 fee for this or that. And the feedback we often get is people really hate that and it leaves a bad taste in their mouth. So for us, we do somewhat of a blend, but mostly we're about this is your lease rate is $1,800 and it's inclusive of all these things. So now it feels like there's, oh, I get this great rate plus all these other things versus, oh, here's this attractive rate, but now you've added on all this other stuff. So instead of saying 16, it's really 1,700, right? So that's our approach, but it depends on the circumstance and it depends on the kind of extra amenity that we're offering, right? Washer and dryer is a great example where that is separate because not everybody takes advantage of that. But that's how we think about it.
Yeah, right on. Yeah, so I think, at this point, John, we've done the walkthrough, right? And so we're going to go back and we're going to actually look at, okay, is the property as good or is it worse than, what we had thought? So is there anything else that we want to add here, John, before we wrap up this episode? Is there anything else you wanted to say?
I think for me, it's just some of those key insights, right? Like that on the ground intel is irreplaceable. So getting out there, walking the properties, online listings only do so much. And you also have to keep in mind that the broker is a salesperson trying to sell a deal. So they're going to put everything in the best possible light. They're going to shoot the photos at the right angle to exclude the,
Yeah.
giant industrial warehouse behind the property or something that you can only see if you actually go out and drive. Quality and condition can vary widely even amongst asset classes, right? So a class B down the street might be in much better, much worse condition. And so, just because something's class B, you can't assume it's all going to be in the same level of upkeep, right? And then I think just those local things matter, right? The proximity to amenities. Are you close to a more thriving? You get a real sense of an area as you drive it. Is this an area that's going up or going down? So if you see, new retail centers being constructed and you drive by and the restaurants are packed, right? Like these are clues that help tell you what's happening in the area. So it's not about, just driving around blindly. It's like paying attention and focusing and seeing what the people look like what's their vibe, like, what's their energy, and then like what's the, kind of vibe of the area. And, a lot of this comes down to emotion. It's no different than buying a home. People buy homes on emotion. They decide to rent a property on emotion. So we just apply those same theories and thought processes.
Yeah, right on. So, final thought on this. Although I did buy my place down in Florida, it was sight unseen. We did that online. We did a walkthrough with the actual agent through an open house, and we put an offer in. It was a hot property. That is something that we highly, highly recommend not doing for a large multifamily investment. And so, although you can go online, you can do a lot of research online, Google Maps, and all the rest of it. Nothing, nothing, nothing beats actually flying out if it's not in your backyard and going and touching and feeling and walking through the actual buildings yourself. Okay. That is something that is 101 when it comes to these larger multifamily investments. And it's something that will pay dividends if you add that as a standard approach to all acquisitions when it comes to multifamily investing. So thanks for listening, guys. If you enjoyed the show, please subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.